Welcome to the 40 Finance channel, everybody. My name is Jeff Beers. Today I'm looking at the top 3 video game stocks in 2020. Try to figure out which one of these 3 is the best investment, and I'm going to share with you a possible alternative way to getting into the video game profits that are going on this year in a much more streamlined process. Just a reminder, as always, that my stock picks and projections are for entertainment purposes only. Please talk to an investing professional before taking on the risks of the stock market. If you do enjoy stock market analysis though, and you like to talk about investment ideas, trending stocks, and personal finance videos, then please subscribe to the 40 Finance channel. Thank you to everybody for your support so far. All right, so in the midst of the corona lockdown, there's been a huge spike in video games, streaming services, anything that's kind of a at-home based activity and service has obviously been up significantly over the past 2 months. And investors have been very aware that the video game industry has seen huge boons in user signups, overall usage, time on games, all those things, which has been great. It's not really a secret, so to speak. So this isn't some underground industry, that you're going to happenstance around and have a good investment. Everyone's aware that video games are going good, okay? So when we think about the bull case for video games, as we get into these stocks, you got to kind of look ahead a little bit because the coronavirus activity is kind of baked in, right? The lockdown activity is pretty much baked into these prices already. But there is still growth to be had, and it just depends on how convicted you are in like the following scenarios of, number one, are we looking at a long-term behavioral change with video game players into the space? Has video games become more addictive, so to speak? And do we see the trend of online usage perpetuating throughout the summer, even though the lockdowns are slowly being lifted, the weather's going to get nice? What does it all mean for video games? You have to have a point of view on that one. I personally believe that behavior changes are occurring, and I think that there's more opportunity in the video game space over the next 12 months. But most of what I'm looking at is thinking that, hey, this, COVID boom has been incremental, right? It was not on the books for 2020 that everybody would be home for 3 months playing video games. So that's a bonus. Then we have, going forward, we need to have the success of the new platforms coming out, which is Q3, Q4, the new PlayStation, new Xbox. We need to have behavioral changes in video game players who are, A, more of them online, and B, more of them making online and in-game purchases to really lead these software development companies and gaming development companies. That's how they make a nice chunk of revenue. So you got to have that behavioral change. And then finally, one of the things that has sort of boomed as well is this rise in esports tournaments, esports on TV, where people watch these folks in the video game space competing against each other for cash prizes. That's really big right now, but we also don't have sports right now. So will that continue as traditional American sports eventually make their way back to TV? And finally, just like we're watching this on YouTube right now, YouTube has inherited a huge boon from this behavioral change because folks who are new online are watching a ton of videos from their favorite creators who show how they're playing games, tips, tutorials, all those things. Can we sustain those big factors heading into summer when more distractions will come out, right? So lockdown will be lifted, distractions from gaming will be more prevalent. How do we see the market? Do we see a downturn in the market after the lockdown as people have more options? Probably, but what does it mean over the longer course of time? That's what we're going to be talking about today. All right, so today I'm looking at what I consider the 3 best video gaming plays. No big surprises, no top secret companies in here, but just trying to get a feel for where does the market evaluate these during this boom period. And first on the board is Activision Blizzard. So Activision price today sits at $73.14. You have a P ratio of 36.19. The 52-week range on Activision, and this is important, $42 to $74.80. And you see with today's price, you're right at the 52-week high. Okay, so you're not uncovering some sort of secret investment that anyone's, overlooked or a laggard or anything like that. People have been hyper aware of the video game boom, so you're not necessarily getting a discount. However, when you look at Activision from just a pure fundamental long-term play, you have a forward PE of 30, and that's going down in the future, which is a good sign. We have cash on hand of $6 billion and a debt load of only $2.6 billion. So relatively healthy in that regard, plenty of cash on hand to take care of their debt if they need to. And you get a bonus with Activision. It's not much, but you get a dividend of 0.56%. And my guess is that that will continue to be padded as the years go on. So I would say from a fundamental standpoint, Activision Blizzard in a good place. You're not going to make money tomorrow necessarily, and you could wait for the next dip to buy shares. But from a long-term perspective, this could be a nice way for bulls who believe that video games are only going to get bigger. And as always, we're going to look at the TipRanks dashboard to see what the best performing analysts think of Activision Blizzard. Shout out to TipRanks. I am a paid subscriber. You can use my referral link in the description if you are interested in signing up for this service and supporting the channel. TipRanks has a lot of great tools that are different from the ones you find on like Yahoo Finance and CNBC. You get to look at how analysts weigh stocks. There's a lot of sentiment tools and hedge fund tools that I find very useful. So if you're interested in TipRanks, please check out the link below. From an Activision perspective on TipRanks, we have 18 of the best performing analysts who are following the stock, which is a pretty big number. And we got 17 buys, 1 sell, median price target of $76.61. That's only a 4% upside from today, and that's projected over the next 12 months. So again, not really a short-term play here, right? You're looking out beyond the short term for reasons to get into Activision. You got a high bar price target of 84 and a low bar of 59. So overall, the consensus, 17 out of 18 analysts have this stock as a buy. Just don't expect quick returns. All right, next on the board, we have Electronic Arts, ticker symbol EA. Current stock price at $116.62. You see that P ratio is pretty low at 1132, but if you look at the 52-week range, very similar story here, $85 to $120. Today we set at $116. Electronic Arts is not technically on sale, so to speak. You look on this one, this is a year-to-date chart over here. You could have got it as low as $85, just a month and a half ago when the stock market crashed. But overall, this is similar in fundamentals from Activision. You got a forward PE of 23. That actually goes up from the current version of 1132. But cash on hand at $5.7 billion and a debt load just underneath $1 billion. Electronic Arts, again, really strong from the fundamental standpoint and a good candidate for a long-term play. All right, for the TipRanks analysts, we have 11 buys and 3 holds. Median price target of $125. That's an 8% upside from today. And just like Activision, you know, that 8%, that's not a plus 50% gain that's projected, no 100% gains here. We're dealing with big stocks in markets that are being closely watched. So I say this as sort of a word of caution to the younger investors who might think, hey, video games are on fire right now. I'm going to buy Electronic Arts and it's going to go, you know, straight to the moon for profits for me. Not necessarily the case. Doesn't mean that it's bad. It's not a bad play. It's just a longer term play than you might believe. All right, last of the top three is Take-Two Interactive Software, ticker symbol TTWO. We got a price today of $129.85. P ratio of 43.90, which is the highest of the bunch, I believe. 52-week range, $99 to $135. So similar. All three have such a very similar story here. At $129, you're barely off the 52-week high. So again, you might choose as an investor to wait for the next market down day. Seems to make a lot of sense here. Forward PE does drop to 26, at least from Yahoo Finance perspective. Cash on hand, another solid company, $2 billion in the bank. Debt load of only $175 million. So they have the opportunity to kind of weather the storm, and this is exactly what we're looking for in a long-term play. On the tip rank side for Take-Two, it's a little bit of a smaller stock from the big three, so we only have 4 of the best performing analysts taking a look at this one. However, all 4 are a buy. And the price target of $142.67, that's the median price target. That is 9.87% upside from today. So technically, Take-Two has the most growth prospects, so to speak, but we're talking about 1 or 2 percentage points. Really, the key here is, if you're an investor, is take a look at the titles of these software companies and the upcoming titles to try to project who has the next boon baked inside of them. All right, so we know what the top 3 video game stocks are. I'm going to throw at you an alternative play if you're really big in this sector and you believe that there's a lot of future for it, particularly if you're a younger investor and don't want to put all your risk in individual stocks. So this is an ETF that I talk about all the time on this channel, and that is the QQQ Invesco Trust, which features the top 100 companies in the NASDAQ stock market. And the reason I call this one out is because it's at similar highs that these video game stocks are. So you're essentially buying at the same level of the other individual stocks, and it gives you exposure to some of the other top performers in the NASDAQ to kind of hedge your bets a little bit if things don't go as bullish as expected for the video game sector. So you can see on this chart here where Invesco has been trending since the year to date. Same kind of pattern as we saw in all those individuals. And then down below here, I highlighted the holdings that are within QQQ and the weight that is in them. The dark yellow ones are more of the direct plays to the video game market. So you see Microsoft there, even though they do less than 1% of their sales for the Xbox. I believe it's about $1 billion in Xbox revenue over the course of $125 billion for the whole company. They still are a direct play, right? Then you got on the bottom Activision, Electronic Arts, and Take-Two. Those sit squarely within the Invesco QQQ Trust. They're all coming in at less than a 1% exposure, but they're coming in with these other names to give you a more balanced approach. Then I put in the softer yellow some companies that are really, very strongly tied to the video game industry that you can capitalize on as well. Amazon is obviously going to make money on console sales, game sales, accessory sales during this time of video game interest. Then you have Google, who of course runs YouTube, and would power most of the advertising that the video game industry would use to reach people. So if I was going to pick out a handful of stocks that I think can ebb and flow well with the video game market, these would be it right here. And that's just a nice little slice of the QQQ Trust. So if you don't have positions in the top 3 stocks that we talked about here today, and you still want to get into the video game land, you might look at Invesco QQQ. It's a more well-rounded play, and it's still going to give you exposure to the video game industry, and you won't be at as much risk if some of the bull projections don't, come into fruition. For some reason, the new consoles are put on pause, or behavior changes in ways that we don't expect. The QQQ is likely still going to be running strong as the market's running strong, so you can still capture profits and have the exposure to the video game industry. All right, folks, so that's my take on video game stocks here in 2020. Hope you enjoyed this video. Please give me a like and subscribe if you like stock market analysis. I'll see you on the next video.